Today's data releases include Belgium's inflation rate and Belgium's GDP data, with Belgium's inflation rate coming out of the minus territory to 0.29% and GDP reaching 0.3%, is Belgium's recovery picking up speed. I'm Jessica Walker, and today I'm joined by Tom Rogers from Oxford Economics. Belgium inflation rate was released today, reaching 0.29%, well above the forecasted minus 0.2%. Is Belgium's economic recovery increasing momentum?
Well, Belgium's actually been recovering very gradually for most of the last year or two, but I think it's fair to say that moving into 2015, there are a couple of extra factors that are helping Belgium's economy recover a little faster than over the last year. Firstly, of course, is stronger consumer spending, as consumers are enjoying a boost from lower oil prices. Energy bills have fallen around 10 or 15% in the last year, and that's helping growth in the first quarter of this year. And also, of course, a weaker euro is helping trading around the eurozone as well. So Belgium's benefiting from that as well. So I think it's fair to say that Belgium's recovery is certainly picking up a little bit of speed through the first half of 2015.
With exports equating to two-thirds of Belgium's GDP, export figures currently stand at a 4-month high month-on-month. Is exports the main driver of GDP data out today, reaching forecasted figures of 0.3%?
Yes, the acceleration of quarterly growth in Belgium to 0.3% was pretty much in line with what we'd expected. GDP growth in Belgium over the last year or so has been a little uneven, but it's kind of picked up a little bit in 2015, as I say, partly because consumers are spending more, but also with Belgium being a key part of Eurozone manufacturing supply chains. What's good for the rest of the Eurozone tends to be good for Belgium as well. So where you can see increasing exports from countries like Germany and France, it tends to impact quite positively on Belgium as well, either through demand for components for firms in other countries or through transit services through Belgium as well. And we expect export growth to be one of the key drivers of Belgium's recovery for the next couple of years, partly due to the fact that the euro is going to be much weaker in 2015-2016 than it was in 2013 and 2014.
In the next 7 days, we're expecting Belgium's unemployment rate and retail sales year on year. Are you expecting any drastic changes to these figures that are forecasted to remain steady?
Well, we're expecting the unemployment rate to be stable at 8.5% in next week's figures. That would look quite that wouldn't be interpreted as particularly positive, but I think that needs to be borne in mind of the fact that more people are participating in the Belgian labour market. The participation rate has been increasing for most of the last year or two, and so with more people coming into the labour force, even as firms are creating more jobs, then the unemployment rate does sometimes stay quite steady, and we think that that's probably what's going on in Belgium at the moment, and it will probably continue for the rest of this year. So the headline unemployment rate is probably going to stay where it is at 8.5% and come down very gradually. But that probably understates the strength of the Belgian labour market at the moment and the rate at which companies are starting to create jobs. On the retail sales front, well, we've had a strong couple of months as Belgian consumers start to spend some of that oil windfall, and we're expecting March's figures to be a little stronger again. We've seen very positive numbers on consumer confidence and things like car sales around the rest of the Eurozone, and there's a real sense of a kind of feel-good factor very gradually starting to return, and I think that's probably going to be witnessed in Belgium as well with the retail sales figures.
Well, thank you, Tom. That's all for today, but continue to check back for the latest Dugoscopy updates.